Sorry about the little delay. Had a computer issue on my other computer. Anyway, Friday was an exceptionally strong day. And when you look at the daily chart, it's a huge buy climax day. And it's the third buy climax day since the low back here in December, the end of the year. We've had a strong breakout here, second breakout here, third breakout here. We have three buy climaxes, and you have a tight bull channel. You have a parabolic wedge top, and that's what this is. We can keep getting 4, 5, 6, 10, 20 buy climaxes, but it's not going to happen. So we're probably going to start to pull back. First target is always the bottom of the most recent buy climax, which is Friday's low, and then we have a higher low here. The bottom of the parabolic wedge is the pullback after the first buy climax here, and then possibly a pullback all the way down to December's close at some point. It's 200 points down. Usually if a year rallies on the open, it comes back and tests, yes, last year's close. That did not happen in 2017. We rallied at the beginning of the year and never tested back to the start of the year. Another thing about Friday, we have an exceptionally big buy climax day late in a trend. We had a buy climax here, disappointment, buy climax here, disappointment, buy climax here, probably disappointment. And that means that today will probably be disappointing for the bulls. Even if it's a bull bar, if the bull bar is small, it's disappointing. And we'll probably get a bear bar today or tomorrow. Here a bull bar, and then two bear bars. The market's going out of its way to create a very strong January. There might be some profit taking into the end of the month, and this is the end of the month. We have 3 days left in the month. Right now, let me put up the E-mini. Weekly chart last week, similar to the daily chart, we have three buy climaxes, 1, 2, 3. So probably disappointment this week. And you know how historically overbought the daily, weekly, and monthly charts are. Monthly chart, huge bull trend bar. Right now, the biggest, strongest bull trend bar on the screen, and that's 8 years. This bull trend bar has a tail on top. We do not have a tail on top here. We have a tiny one. We'll probably get a bigger one, and that means that we'll probably get a pullback sometime in the next 3 days, the last 3 trading days of the month. Huge buy climax. While it's possible this could be turning into an even stronger bull trend, it's more likely that it's a blow off top and that we're going to correct down to the low of this bar over the next few bars. In other words, over the next few months. And if we get down to the low of this bar, then we're back to the December close, and we'll give back all of January's gains. When you have a very strong buy climax day like Friday, 50% chance you get follow through buying at some point in the first 2 hours today, and 75% chance that you have at least 2 hours of trading range trading, 2 hours of sideways to down trading beginning by the end of the second hour. This is already big up, big down, and we're testing the bottom of this pullback from this breakout. We might already be in the early stages of a trading range. 50% chance we're going to get some attempt at follow-through buying, but I doubt we're going to get much above Friday's high. Well, I doubted we were going to do this as well. You know, low probability things happen, and trends can last a lot longer than what appears reasonable. But, you know, look at the monthly chart, look at the daily chart. You know, if this was at the beginning of a trend, I'd say that's fantastic. We're probably going a lot higher. But it's 9 years or 8 years into a trend. It's more likely the start of an exhaustion. You know, we could go up, you know, sideways and then up maybe one more bar, but we're probably going to start to do this. So I doubt that this year I doubt that 2018 is going to look anything like this. It's probably going to start to do this. For the bulls, it's a pullback. It's a moving average gap bar. You have a gap between the high of the bar and the moving average. and it's the first one in a very strong bull trend. So bulls typically buy it. However, when you get a bar completely below the moving average, that means the bears are getting strong. They're strong enough to put a bar completely below the average price. If the bull trend resumes here, usually you get an attempt at a major trend reversal when the market gets back up near the high. So big up, big down, big confusion. If we do rally here, it'll probably be a bull leg and what will become a trading range and not the start of a big bull trend. Right now we're always in long, but if we get 2 consecutive bear bars, we could become always in short. Doji bar, first bar. I think we had 2 bar reversal here, so that'd be a 10-minute doji, 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 doji here. Despite the early dojis, we ended up with a huge bull trend. I would not sell the one high, even though we're below the moving average and it's testing the moving average. This is right now probably a minor reversal. A lot of the bulls will wait for a micro double bottom before buying because the gap down is so big and bar 1 is such a bad looking buy signal bar. But bulls who are buying because they know the downside is not great. Basically a 50% pullback of a very strong rally. And they know if it goes down, instead of up, there'll be buyers once they, because of a double bottom. Bulls bought a 50% pullback from this rally. Bears will sell a 50% pullback from this gap down. So probably sellers right around here, and we'll probably start to go sideways. Can you sell the close? When a bar looks like that, I would not sell, especially when this precedes that. However, I think this is big down, big up, and we're going to get a trading range early on. Even if we get all the way up to Friday's close. If 3 is a bear bar, can you sell for a lower high major trend reversal? I would not. 2 is too strong, and Friday is too strong. Probably an early trading range. Bulls want to buy lower down here, and bears want to sell somewhere in the upper half. We're in the upper half now, but 2 is so strong, they'll probably wait for some kind of a micro double top before they sell. The big gap down makes a big bear trend day, makes a big bull trend day unlikely. Also a gap bar, gap below the moving average, the high of this bar. When you get a rally, it usually leads to an attempt at a major trend reversal. And that also reduces the chances of a big bull trend today. The very strong bull trend yesterday and the strong bull bars 2 and 3 make a bear trend unlikely. And therefore, we're probably going to be sideways for the first couple of hours. Bull trend not likely, bear trend not likely. That leaves us with a trading range. Buyers or sellers below 4. I think we're always in long. I think we opened always in long, even with the gap down. And then it was reaffirmed by a big bull bar 2 and then a follow through bar 3. So probably buyers below 4. The bears want a lower high major trend reversal, but that tail on the bottom of 4 makes that unlikely. Trading range open, anyone buying the 4 low has to put a stop all the way down here, which is, I think, pretty far down. So it's probably not a particularly good stop entry, limit order entry buy. And to sell, I think the probability is too low for a stop entry sell. Strong enough reversal 2-3, so that we'll probably get at least a small second leg up. But will it be from a bull flag up here, or will it be from the bottom of a trading range down here? Rally, 50% pullback. Gap down, 50% pullback. Sell off around a 50% pullback of this rally. Sometimes you'll get major trend reversals on the open where the pattern does not have many bars, so it looks like a minor reversal. For example, we have 1 bar down and then only 2 or 3 bars up. typically too small for a major trend reversal, usually only a minor reversal. So the odds are this sell-off, while the bears are hoping for a major trend reversal, is probably a minor reversal, which means a bear leg, what will end up as a trading range. Just like 50% pullback was, 50% pullback from the rally was the buy zone, 50% pullback from the gap down, the sell zone, and now we're a 50% pullback from this reversal, so the buy zone. For the bulls, they have a reversal and a pullback. So they're hoping that this is the start of a bull trend. But big up, big down, big up, big down, big up, confusion. Bulls would rather be buying pullbacks than at the top of the swing up. We're always in long, possible low of the day, but big gap down, big sell off here. A lot of bulls are buying below things and scalping instead of buying above things, hoping for a bull trend. Confusion, right? Up and down and up and down and up. Still always in long, but not very bullish. And the bears would rather sell higher, like a test of yesterday's close. Increased chance that today will have a bear body, and that's probably why it's one of the reasons the bulls probably wanted it to gap down to make it very difficult for the bears. So if the bears are going to get a bear body today, they have to get it closed far below yesterday's close. So it's actually pretty interesting. The odds coming in were today would disappoint the bulls, and the bulls did something to try to make it difficult for the bears to create a disappointment bar. They created a big gap down. If the bears are going to get a bear bar, they have to get a close today below the open, which means far below Friday's close, and that's very difficult for the bears to do. So it's kind of sneaky of the bulls. They know the bears want the bear bar, and the bulls are saying, you want a bear bar? Well, you're going to have to sell off a lot because we're going to open it way down here. So if you want a bear bar, you're going to have to sell off a lot, and that means you're going to have to overwhelm a whole bunch of buyers down here. The open of the day again, probably an opening trading range, so probably buyers around here. Bears want the lower high major trend reversal, but like I said, too few bars, only one bar down, only 3 bars up. So probably instead of this being a lower high major trend reversal, it's a lower high minor reversal, and we'll get a trading range. Probably buyers below 1 if we get below 1. For 2 legs down, 1 pullback, 2. I would not buy with a limit order at the 1 low, but I do think this is going to be a trading range and not the start of a big bear trend day. Limit order bulls. Some might have bought the 5 low and scale in lower, and they'll probably make money, and there'll probably be bulls buying the 1 low. I'm not willing to do anything right here. Probably a trading range, so this is probably the buy zone, and therefore not a good area to be selling. Important that 7 so far has not fallen below 1. The bulls are hoping this is an early low of the day, and therefore they don't want to pull back to fall below what they hope is their bottom. I think it does not matter. I think a trading range is likely. Trading range, the market typically falls below support before it reverses up. So we probably will fall below 1. And instead of breaking strongly to the downside, we'll probably start to go sideways. I had a limit order over here to sell 1 tick below 5, thinking that the scale and bulls would sell and I could make a scalp, but it did not get filled. I pulled the order because if it gets up there now, it would be rallying from the micro double bottom, and I don't want to sell a micro double bottom at a double bottom. Probably buyers at the 1 low has to bounce 5 ticks for them to make a profit. What about buyers above the 8 high if it closes on its high. For stop entry trader, it's a trading range, right? Traders like to buy at the bottom if there's a double bottom. If the sell-off is strong, they want to buy a micro double bottom. And is this enough of a micro double bottom? I'm not sure. It's certainly not a very good buy signal bar. The limit order bulls who bought this low made money. The stop order bulls, we should get up to the 5 low. Limit order bulls bought the 5 low. Some bought the 6 low. So we should go up a little bit higher, but I'm not sure that it's worth buying with a stop. And the bears don't want to sell down here. Here we broke below the bottom of a very strong bull bar, and we broke to a new low of the day. And instead of the bears selling, creating a big bear breakout, the bears took profits. The bears who sold higher took profits. So if the bears are buying low, you know the bulls are buying low. The result is probably going to be a trading range. For the bears, they have a lower high major trend reversal and a bear breakout and a pullback. But we're around a 50% pullback from this rally. And we have a double bottom. So not a lot of bears willing to sell below 9. You can do it for a swing, hoping that we totally reverse this, but probably we've entered a trading range. If 9 has a bull body, probably buyers below 9. You can see we're right around the open. The open might be the most important price today. We may oscillate around it. And we went this far above it. And if we oscillate around it, an equal distance below would be right there. So if today ends up as a doji bar on the daily chart, you got to be thinking that the open might be around the middle. And therefore there's some theoretical support here and then obvious support at the bottom of the buy climax down here. Can we get all the way down to yesterday's low? Not likely. Are we always in short yet? If this bar closes near its low, we're probably always in short. We might be always in short simply because 8 broke below 1 and 7 had a big bear body. When you have 2 or more big bear bars early in the day, the odds are the day will not be a big bull trend day. You can get a reversal up and get back to the high of the day, but it probably is not going to be a big bull day. So reversal day usually is a trading range day. Like this. Big bear bars early in the day, falling far below the open. Unlikely that the day is going to rally far above the high, even though you can get a reversal that retraces all of the sell-off. The odds are the day is not going to be a big bull trend day. And that's the case today. Especially if 10 closes somewhere below its midpoint. That combined with 7 and then 7 bars without a bull body, I think even though Friday was so exceptionally strong, today would end up not as a bull trend day. We could get a reversal up, but we'll probably stall out around the high, maybe a little bit below, a little bit above. Bears want a gap below 8, but the limit order bulls who bought the 8 low and lower probably will make money. Parabolic wedge with 5 and 8 still looks like a pullback from a very strong rally than the start of a bear trend, but a deep enough pullback. So today will probably be a trading range instead of a bull trend. I would do nothing here. Bears are trying to get a gap, 8 low, 11 high for a measured move down to the 60-minute moving average area. Measured move either from here to here or from yesterday's high to here, 60-minute moving average. But the lack of consecutive bear bars makes it more likely that this is a bear leg in what will become a trading range, and it's simply searching for the bottom of the range. Like this, searching for the bottom of the range, it found it. Searching for a bottom, it found it. Here, searching for a top, it found it. Searching for a bottom, it found it. And what did I just do? Not a great looking stop entry buy, parabolic wedge 5-8. Bulls, I think it's hard to be buying with stops when the market looks like this, but limit order bulls are buying, looking for scalps. And for the bears, they want to sell above the prior low. They want to sell above the 1 low. They want to sell above the 8 low. They want to sell up around the moving average, maybe a double top, 9. You can see the bears trying to keep the gap open. They want the bulls that bought below 8 to be trapped and give up. But we're probably going back above the 8 low because this is probably a bear leg in a trading range, and that usually rewards limit order traders who buy below prior lows. Possible low of the day, a big high 2 buy, 2 legs down, 1 pullback 2, and the second leg is a parabolic wedge 1, 2, 3, but not a particularly good looking, so not a high probability buy. You can see we're back above the 8 low. So we're probably, this channel has enough bars and it's tight enough so that this reversal up is probably minor, which means we'll probably go sideways here, or if we go up, we'll test back down. However, I don't think we're going to go much lower. If we go lower, might get a third push down. 1 pullback, 2 pullback, 3. And that first push down like this is strong. A lot of times you get a second or a second or a third push down. You get a wedge instead of just 2 little legs down. Strong sell-off. Another strong sell-off. Maybe we'll get 1 more leg down. We got 2 more legs down. Not only did the limit order scalpers make money, the stop order scalpers made money here as well. So that reduces the chances that this is going to be a big bear trend. I want to check something here, so I'm going to turn the screen up for a moment. So the bears double top 9, but consecutive bull bars, parabolic wedge, a big high 2, probably buyers below 12, low probability buy, low probability sell. Might get 1 more push down, 1 pullback 2, pullback 3, but this rally is big enough to make sideways more likely than a third push down. The bears want the double top bear flag, break below the neckline, measured move down. What happens if 13 closes on its low? Then we have a double top with a better sell signal bar. I still would not sell. I still think sideways is more likely than down, and I think the market is searching for its bottom. I don't know if you noticed, but it rallied 5 ticks above the 12 low, and the bulls above the 12 low made 1 point. 4 possible high of the day. 11 possible low of the day. The bears did not get a good sell signal bar, 4 or 6, did not get good follow through 8 or 11, and they're following a very strong trend day. So all of that reduces the chances that this is going to go down a lot further. The bears still have a gap, 5 low, 9 high. They're hoping that maybe we get a small pullback bear trend after Friday's small pullback bull trend, but those days only happen a couple times a month, so we're probably not going to get that today. Good bar for the bears, but the bars to the left are bad for the bears, both today and Friday. The bulls already have their scalp from the 12 low. They're not buying the 13 low. You can see the close of bar 12 is right around the open of bar 1, and the first 60-minute bar is a doji bar, so not a strong bear bar. And following a very strong rally on Friday, this is probably not the start of a big sell-off. 5 ticks below 13. The bulls are trying to trap the bears, the stop entry bears who sold below the bear bar. Not behaving like a trend, behaving more like a trading range. Selling off, but limit order bulls making money and stop order bulls making money. Bears again trying for a big gap and then a measured move down. They probably will fail again. Surprisingly big bar 14, so the bulls will probably need at least a micro double bottom. They're hoping wedge 1, 10, 14. I'm going to open up my examples folder file. Bulls want a wedge bottom and then a rally. A lot of bear bars, but still became the low of the day. When you have that many bear bars and you get the reversal, usually you do not end up with a big bull trend day, even if you rally for the remainder of the day. You can see we barely got above the high of the day. Big wedge bottom and reversal became a reversal day, but it was a bear day and then a bull day. Did not end up as a strong bull trend day. Same thing. Early sell-off, 3 pushes down, 1, 2, 3. We got a reversal for the second half of the day, but could not get far above the open. So even though it rallied for hours, it became a bull leg in a trading range and not a bull trend day. Wedge, same thing. Even if you get the reversal, probably will be a bull swing and not a bull trend. Did not get far above the open. Big enough bear bar 14, the bulls probably need a micro double bottom. So theoretically, you can sell the close, but I think it's not a very good trade. And the bulls, I think, want at least a micro double bottom. It's still on a swing short. Bears have a gap, 15 high, 10 low. They want the measured move down. At a minimum, from the double top bear flag. This is the measured move from the lower high. And if you use the upper high here, traders are selling the market, betting that the bulls need at least a micro double bottom, and therefore the first reversal up will not get far. Pretty strong selling. Let me take a look at ticks. Ticks got down to minus 1,000, which is pretty strong selling. Usually the first reversal up will not, usually this will not be the low of the day. Normally, you'll have to get a higher low in ticks and a lower low in price. So this is probably not going to be the low of the day, even if we bounce here. Still sell at close, but big tail and climactic might bounce, but probably minor reversal. The bulls will probably need at least a micro double bottom. What can the bulls do to turn this into the low of the day? They need to get a series of consecutive bull bars. More likely, they'll need at least a micro double bottom. It was reasonable to buy the 11 high. We got a bear breakout. Scale-in bulls who bought and used some kind of a very wide stop will buy more above a bull bar, since we're at least 2 to 3 times the size of a scalp lower, 2 to 3 points lower. However, I'm not going to be buying above 16. There's logic to it. The scale-in bulls who bought here, looking to buy more above a bull bar. If 16 closes on or near its high, they'll buy, expecting the market to get back here, which is all likely. This is strong enough down so that I'd rather take a second entry buy. The odds are there'll be sellers above 16, even if it closes on its high. But if you get 3 consecutive bull bars or 1 or 2 huge bull bars, then this will probably be the low of the day. Right now, it's more likely that we're going to get at least one more push down, and the bulls will need a micro double bottom. Sometimes you get a tremendous sell-off in the open, yet it becomes the low of the day. This is another one of those examples where you have a lot of big bear bars early, and even if you trend up for the remainder of the day is not a bull trend day. It did not close far above the open. It's a reversal day, and we had a sell-off and then a swing up. Same thing here. Big sell-off early on. We went up to a new high, but on the daily chart, the close is right around the open. It was a doji bar on the daily chart, a reversal day. Most reversal days where the initial sell-off is big, most reversal days do not get far above the early high. So you can swing up for 6 hours, yet not be a bull trend. You have a bull leg and a trading range. You have a bear leg, a bull leg. You can see a lot of bulls were hesitant to buy above 16 because of the 3 big bear bars. They want either a micro double bottom, one more sell-off and one more reversal, or 3 consecutive bull bars, and then they'll buy closes or buy pullbacks. I would feel better about the bull case if the ticks did not get down to 1,000 here. Usually the first time ticks get to minus 1,000, the market has to get one more new low in price. Maybe many more new lows in price, but usually at least one more. So the price when ticks get to minus 1,000 is usually not the final low. You usually need some kind of a divergence with a lower low in price and a higher low in ticks. I want to look at a 50% pullback from yesterday's rally. We're below that. 50% pullback from the entire rally. It's a little bit lower at the 60-minute moving average. To me, this is not yet a very good bottom. Low one short, but we have a credible buy above 16. Looks like it's confusing here. The bulls who bought above 16 might get out below 17 because it's a bear bar closing on its low, and therefore they're buying the 17 close, trying to prevent the market from falling below 17. The bears know that the bulls who bought here, hoping for a rally here, a lot of them will get out below 17. And then, therefore, the bears are trying to get below the 16 low. Bulls trying to get a credible reversal Once you have 2 or 3 good bull bars, then the odds are you'll get at least a second leg up, which means bulls will buy the first pullback. There are limit order bulls 10 low who bought more lower. They want to close the gap. They want to get above the 10 low. The bears will try to keep the gap open, so they'll sell here. I still think, I keep talking about reversals, right? I think we're going to get a reversal, and the market's simply looking for the bottom. So I do not think this is going to last all day. 2 legs up, 16, 18, but not a very good sell below 18 because the reversal up is strong enough to make a trading range likely, and traders don't want to be selling too low in a developing trading range. However, bulls disappointed, unable to get above that 10 low, and this reversal down in part is the bulls who bought the 10 low giving up. To buy above 20, the bulls, I think, need a pretty good bull bar. It's still slightly more likely that we have to get to a new low of the day because ticks were so negative, so much momentum down. Usually price has to get to a new low. If 20 closes on its high, possible low of the day, so okay, swing buy. I don't think the probability is good enough for a scalp above 20. If it does not close on its high, if it has a 3 or 4 tick tail, I would not buy. I would wait to see if we get a strong reversal up and then buy. We have a high, we have a gap, possibly a measured move down. Takes us to the 60-minute moving average. Bears' minimum objective was a new low, 1 tick below 17. Bulls trying to create a double bottom. Not a good buy signal bar. Odds still are that we're going below the 15 low. 5 ticks above 15 low, so the bull scalpers made money. Reduces the chances that we're going a lot lower. Might get down to the measured move and the 60-minute moving average. But I think we're going to get a reversal today. Let me rephrase that. I don't think we're going to continue down much further. I think we're either going to get a reversal or we'll go sideways. Strong sell-off, likely to get second leg down. We have the second leg down. So this is a higher probability buy than 16. Still a very tight channel, probably a minor reversal, which means probably a trading range. But if we start to get 3 or 4 bull bars, then always in long, and we'll get the reversal here. So, okay, swing buy, higher probability. Wait to see if we get 3 bull bars. For the bears, a pullback from the breakout to a new low. A decent bull bar here, decent bull bar here, decent context. So not a great short below 22. Whenever you get these relatively big buy signal bars in a pretty tight bear channel like this, a lot of the bulls don't want to buy with a stop. They want to take a second entry buy, or they might buy around 50% down, like around here. Always in bears, I would get out and wait for a decent bear bar and then sell again below the bear bar. If we get 2 or 3 good bull bars, the bears will wait for a second entry short. Double top 18, but only a bear doji, and we have a second entry buy for the failed breakout below 10. So probably buyers below 22, and that's why we're going up. As soon as traders saw the bad closed on 22 they bought, knowing bulls would buy below 22 and bears would not sell. This is probably a bear leg and what will end up as a trading range. And the trading range might be down here for the remainder of the day, or we could get a reversal, and then we have a bear channel and a bull channel, and it ends up as a doji day closing around its middle. Right now, I still think it's most likely that we'll close around the open of the day. After such a strong day on Friday, that reduces the chances that today is going to be a big bear day. More likely, it'll be more of a neutral day, closing around the middle. A lot of time left in the day. Therefore, we could go sideways, we could go down more, we could go up, we could go down. We have a lot of time left to get back to the open, if we get back to the open. Surprise bar does not necessarily mean always in long, but it's a sign that a lot of the bears are giving up and they're accepting the reality that this is probably not going to be a bear trend day. If we get a second big bull bar, then we would have totally reversed or mostly reversed this, and that would make us always in long, and we'll probably get a swing up back to the high of the day. So the bulls need more than simply bar 23. They need one more bar. If they do not get it, then more likely we'll be in some kind of a trading range down here. If they get it, then we'll probably reverse all the way back up here by the end of the day. Bears sold the moving average. You can see the tail on top, but a big enough reversal to create big down, big up, big confusion, and it increases the chances that we've seen the low of the day. If we do get below 21, probably buyers below. So if we get down to the measured move, you can see we've already closed the gap, 10 low. And some of this tail is the bulls who bought the 10 low and bought more lower are selling to get out break even on their first buy with a profit on their lower buys. Tail, disappointing to the bulls, close below the moving average, disappointing for the bulls. Deep pullback from the 23 reversal, disappointing for the bulls. For the bears, a double top 18, but too strong a reversal for a lot of bears to sell below 24. This is, I think, about the appearance of the 60-minute bar. 24, the final bar of the hour. And the bears are trying to get the bar to close, the 60-minute bar to close on its low. Fairly close to the moving average. We pull back here, here, here. We can get there by either going down or simply by going sideways. Buyers or sellers below 24. I think this is probably a trading range, and therefore selling that far down is a low probability sell, and that means buyers 24 low and lower. I said the bulls needed more to make it always in long, and they do, so it's still always in short, but we're getting too many good bull bars. Bar 2, 11, 12, and then especially 16, 21, and 23, and too much buying pressure. So I think bears want to sell second entry sells after a strong reversal up. They don't want to sell below 24. They want to sell after a micro double top, or sell with limit orders above bars above 18 or at the moving average, or sell strong bull closes. Final seconds of the bar. Bulls at a minimum are trying to get a bull body on 24, but they really need a big bull bar and a closed bar above the moving average, which they're not going to get. When I say they really need what they need it to flip it to always in long, which they have not done. So probable trading range, buyers below 24, sellers somewhere above, maybe up to the top of the 13 sell climax high. I think better than 50-50 chance we're going to get to the sell climax high at some point today, which means the open of the day. I just don't know the path. Do we go straight up, or do we form a higher low and then go up, or even a lower low and then go up? But I think we're going here, which is at the open of the day at some point today, since today is likely to be a reversal day. Very strong bull trend yesterday, unlikely to be a very strong bear trend today. We've seen the low, probably for the next hour or two, maybe the low of the day. And the market's deciding how it'll get to the 13 high and open of the day. It looks like we're not going to go straight up, so we may have to get a higher low major trend reversal, test down to the 22, 23 low, and form a higher low. So in other words, right now, the lack of follow through, good bull bar, 21 bad follow through, good bull bar, bad follow through. That increases the chances that this is going to be a trading range, and the bulls will have to get a higher low major trend reversal and then a test up here. That is what is likely. It's possible that we could just keep channeling down, forming lower highs and lower lows, lower highs, lower lows, but it's more likely that this is going to be a reversal day, or that we'll simply stay sideways for the remainder of the day. I think more likely we're going to get back to the open of the day. More bad follow through. Different ways to call it a wedge, 1, 2, 3. I think a lot of bulls want to buy around the 21 high and the 23 low. So a lot of bulls are not willing to buy up here. You can see the tail here, the bad follow through here. Smaller bull bar here, and then bear close here. So traders are selling here, selling close. I had my finger on the button, and I sold that close with a limit order. 6 bar bull micro channel, but bad follow through after good bull bars. A lot of bulls will not buy that 26 low. They want to buy lower, 21 high, 23 low, this 50% pullback, so somewhere down here. Big outside up bar. So surprise bar. The remaining bears gave up. I was trying to buy down here for a swing up to the close. Instead, I ended up buying for a scalp. During the breakout, I'm back to flat, and I'm looking to buy it again. This kind of a day. We're always in long at this point, which means we might rally for the remainder of the day, but it's unlikely that we'll get far above the high of the day. Here we got above the high, but not particularly far above the high. Today's sell-off was much deeper than this. If the initial sell-off is not very big, the reversal can get far above the high. Medium-sized reversal still get far above the high. But when the initial sell-off is big and you get the reversal, typically you don't get far above the high. Here we did not even get above. We got above with a very strong reversal, but we could not stay far above. Could not even get above the midpoint. Too many bars down, got above the high, but barely. Could not get to the high. Got above the high, but barely. Very strong reversal up, barely got above the high. Looks like another disappointment bar. Can you short double top 13 high? I would not. 27 is a big enough surprise to make, I think, the market always in long. Stop for the bulls, maybe the 27 low, definitely the 21 low. Right now, I would say, 70% chance we've seen the low of the day. We broke below the low of the first 18 bars, but reversed up very strongly. And The reversal up continued. Therefore, this is probably going to be the low of the day. You have theoretically limit order bears 26 high, scaling in higher, but I would not. So, and I would not sell below 28 despite double top 12. Too many good bull bars through here. Surprise bar 27, disappointment bar so far 28. Wedge 18.23, but I think not a great short. It's basically a type of two-legged trap where the bulls have a breakout of what was possibly a wedge bear flag, and the breakout is failing. If 28 closes on or near its low, I would not buy the low. Limit order bears made money selling above 26. Still buyers somewhere down here. 21 high, 23 low, and probably buyers below 27. Can the bears sell for a swing down? Double top 12? I would not. I think we're always in long, and I think the best the bears can get is a trading range here. But you can see terrible follow through after the good bull bars 21, 23, 25, 27. So just like there was a problem with the bear swing making a trading range likely, there's a problem with the bull swing as well. Slight overlap still could be a negative gap for a measured move up. Low of the day, slight overlap here, but still could be a measuring gap. Takes us up to the high of the day. A pullback from the 27 reversal, always in long, but I think tricky. If you're taking that buy, I think you need to stop here or better here. And for the bears, I think it's not a very good sell. Zone 27 low down to around the 21 low, probably buyers below 21. Still, I think 70% chance we've seen the low of the day. But if we get one or two more big bear bars, I'll change my mind. This measured move, we close the gap, so that is no longer in effect. If we break above 28, theoretically, you have a measured move up here, but I think that is unlikely. The bulls will try to get a higher low major trend reversal, but strong enough down. First reversal up, probably minor. So it looks like we're going to get a trading range down here. This is what we're getting right now. Reversal day, but very deep sell-off. And the result was not a big bull trend. You know, we rallied, but spent a lot of time sideways. This is what I think we're doing right now. Still always in long, but we're in the buy zone, 21 low, 27 low, 21 high, 23 low. Strong enough sell-off, even though it'll be an attempt at a higher low major trend reversal. The bulls will probably need at least a micro double bottom, unlikely to go straight down and then straight up. Here, the bulls had at least one bull bar and then a micro double bottom, up, down, up, with a decent buy signal bar. So if we get this, it would be a good swing buy for a test up to the open of the day, maybe a new high. I don't think we're going to get to a new high. I think the best the bulls will get is the open. And this 28 high is probably a buy vacuum test of the open, but did not get there. I would like to get a bull bar and then one more leg down before the reversal. Bull bar, bull bar. So I want at least 2 or 3 little legs down and then a good looking buy signal bar for the higher low. The bears want a double top, 12, 28, break below the neckline, and then a measure move down, but that is not likely. Most bears know a higher low is likely, and therefore most bears who sold will look to take profits around here or somewhere down around here. Bull bar 29 and 32, good for the bulls. Double bottom, higher low 27, but 2 pretty big bear bars, 30, 31, makes me think that we probably have to go more sideways to down before we go up. I think we're always in long, and I think we will go up, but I think a lot of bulls want to buy lower. When you get a higher low major trend reversal like this, and the sell-off is in a fairly tight bear channel with fairly big bear bars, it's usually a minor reversal, not a major reversal. Fairly tight bear channel. This is more like today. Fairly tight bear channel. And first reversal up from a higher low usually does not go straight up. We got a test back down here, and then we went up. This is not typical, fairly tight bear channel, but did go straight up. We had a double bottom, which is good for the bulls. This is not like today. This is obviously lots of overlapping bars with big tails, small bodies, and sell-off, higher low major trend reversal, but tight channel, probably not going to be major. The bulls needed a double bottom. This is more like today. Sell-off strong enough so that first reversal up, probably minor, and the bulls will probably need a double bottom. So of all the ones that I showed, this is probably the one most similar to today. And we're at this point right now. Therefore, I think this is a minor reversal, and that we'll have to test back down 31 low, maybe 23 low. The buy the close bulls 27 had an opportunity to get out with a smaller loss on 29, but it did not get back to that 27 close. I don't know that we'll get there here, but I think we'll get there at some point today. We may have to, as I said, test down and get a double bottom first. I think the market's always in long, and that we've seen the low of the day. We're getting too many good bull bars, and the context is good. Yes, it's a very strong day, and this is probably a 50% pullback of this rally. There's the bottom. There's the top. Here's 50%. So right now it's about 50%. Probably some sellers, 27 close. Buy the close bulls, disappointed 28, unable to get out 29. Bought more lower, and they might try to get out there. Always in long, right? I don't know if we've seen the high of the day, but I think 70% chance we've seen the low. Getting near to the end of the third hour, bulls trying to create a bull bar or a test up after a sell-off below the breakout point and down to near the moving average. I think this is a weak looking bull flag, and that will go more sideways to down, and we'll get down to the moving average like we did here, 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 and here. Therefore, high one bull flag, but probably sellers above and more sideways to down. Lower high, but 3 good-looking bull bars, so low probability sell below 34. Lots of reversals. We may go sideways here for several hours like this. I think this is what we're doing right now. I also think that if we get all the way down to that low, we'll get a double bottom, higher low major trend reversal. So if we get down to here, there'll be a double bottom major trend reversal. If we get down to 23 or 31, would be some kind of a double bottom, higher low major trend reversal. Bulls do not want to buy 35 low if it closes, if the bar closes near its low. And for the bears, 3 consecutive bull bars, this is probably a pullback from this reversal up. So a small cup and handle. Cup is the reversal, and then a pullback handle. Odds favor a little bit higher. If the bears get a microdouble top here, then traders would be willing to sell for a test down. Right now, more likely buyers 35 low, buyers all the way down to the 31 low. And if we get below 31, probably buyers below as well. All day long, they bought below 1 despite that big sell-off. They bought below 10 despite that big sell-off. They bought below 15 despite another big bear bar here. I fumbled with my mouse. I tried to buy 1 point below 35, and I just finished talking, and I missed placing it. I did not place the trade. Getting near the end of the third hour. Bulls trying to close the 60-minute bar on its high, hoping that traders will want to buy and trigger the buy, the high one buy. We have a bull trend, a pullback, and a bull buy signal bar. But I don't think we're going to go very far up. I think it'll be like this. Probably this is what will follow, sideways. Okay, so that's the buy signal. The high of the last hour is the bar 28 high, but probably sellers above on the 60-minute chart and 5-minute chart. Higher or low major trend reversal, but not a good buy signal bar, and fairly strong selling here, and therefore probably a minor reversal, and sellers where we are, sellers above 28, probably not going straight up. A lot of bulls want to buy down here. Developing trading range here, the bulls would rather buy lower. The reason why we're not going straight down is enough bulls are buying here, thinking that we may not go lower. But I think more bulls would rather buy 31 low or below 31 for 2 legs down, 1 pullback 2. Bears, they're willing to sell even though we're below the top of the developing range. And they'll sell more higher. If it goes down, they'll take profits. If it goes up, they'll sell more higher. This is, I think, a pretty bad location to do anything. The limit order bulls above the 36 low did not make money. It went up 4 ticks. It had to go up 5 ticks. I think bulls are more interested in buying down here. It was resistance. It was support, support, support. Trading range, the market usually falls below support before going up, so we may have to get below the 31 low, but we may form a perfect double bottom with 31 as well. This is where bulls want to buy. Computer locked up, crashed, I had to reboot. Sorry about that. I don't know if it's TradeStation and go to webinar. I'm not sure which is causing the crash, but I don't see any way to prevent it. My other computer crashes as well with TradeStation. Bulls trying to get their resumption of the bull trend. We're in the sell zone. We sold off here, here, here. I don't know if we'll sell up here, but we're always in long, so I'd rather either be long or looking to buy. Bar 27, bad follow through. Might get bad follow through here, but I still think the odds favor higher. As for the reversal day, I think today will be a reversal day. We sell off and then rally. But I also think if we get above the high, we're not going to go far above the high. We're not getting consecutive big bull bars. Good bull bars, bad follow through. More likely, it'll be mostly a trading range day. Part of the reason for the crashing might be OneDrive as well. I have 2 identical computers, and both are attached to a cloud OneDrive, and that might be causing part of the problem. Bears want double top 28, bulls want strong breakout, and they want to get up to the high of the day. So here's the test of the open. Probably going above the open. Looks like we'll probably get to the high of the day. But the bulls need to start getting consecutive bull bars. Otherwise, this is going to be a trading range, and we'll pull back from here, possibly all the way to the 31 low. Trading range, so traders will take profits at the South IMAX high, 13 high, the open of the day. Bears might sell above 28, but pretty good bull bars 41, 42. Stop order bears 43. I would not do it. I would need the market to go sideways for a few bars to create a double top. And for the bulls, they're buying sell-offs and I think mostly scalping out. This is enough of a surprise, 41.42, so that probably buyers below 43. However, the bears want a low two legs up, 28, pullback, 43. I would not take the short until we at least go sideways for a few bars. Bulls know the odds favor higher, but they're hesitant to buy too high up when we've had bad follow-through. Minimum stop now. This is a fairly major higher low. We have a breakout to new high. This is a more major higher low. Will bears sell below 43, low 228? I would not, but I think the bears who are selling above 28 will probably make money. I'd still rather be long or buying pullbacks. Even though there's a little bit of overlap, 43.28 could be a negative gap for a measured move up. Takes us above the high of the day. If 41 is going to become, if this is going to be a measuring gap, and that's a negative gap, 43, if 42 is going to be a measuring gap, this is not behaving well. We dipped 2 ticks below 28, which is more than you want. You want no dip or 1 tick below. And bad follow through 44 increases the chances that we're going to get a pullback. Next target, high of the day. Open of the day probably will be the most important price, and I think we'll probably close around the open. You can see on the daily chart, we're around the open, so the day is a doji inside day. I think the day will end as a doji inside day with either a small bull body or a small bear body. So even if we go up 5 points or down 5 points, we'll probably close the day right around here. Not a good looking buy. Always in the long, might go a little bit higher, but bears might start to sell above bars for a pullback. Buyers below, always in the long. Next target, high of the day. Different ways to draw the measured move. Maybe from this low to that high. Maybe this low to that high. Unlikely this low to that high. You know, of the different possibilities, this is, I think, the best one. And I'm not even sure that we'll get there. How is 46 different from 18? Well, this was in a bear trend. This is in a bull trend. So this had a higher probability resulting in lower prices. This has lower probability, but tight trading range likely, maybe pull back to the moving average. Less likely a big high two legs up, 1 pull back 2. More likely tight trading range to the moving average, and buyers around the 43 low. Bulls are hoping for this, a tight channel that just keeps going up and up and up. bar 46, like 47 Friday, but the odds are against it. That was in a bull trend. This is in a bull leg and what is probably a trading range. Starting to get a lot of doji bars, so probably a tight trading range. We have two breakout points, 28 high and 36 high. Trading range likely, and therefore we'll probably pull back below the 36 high. You have to assume that if this is a trading range day, which it probably is, the bulls will be disappointed. They're hoping to keep the gap open here. If not here, they're hoping to keep the gap open here. Usually, when you have two breakout points and it goes above both and the day ends up as a trading range, it pulls back below both breakout points. Similar to Friday, we have a breakout, we had a breakout. We're starting to get a weak bull channel. We had a bar with a big tail on top and a bull body, a bar with a big tail on top of the bull body. We have a bear inside bar, we have a bear inside bar, and we just kept going up here. We may go up and do this. I doubt very much that we'll do that. So I do not think we're going a lot higher. If we go to a new high, I think there'll be sellers above. Remember on the 60-minute chart, we have a high one buy, but a bad looking setup. And I said there probably would be sellers above the high of the bull bar. And we're above that high right now. And since it's a bad looking bull flag, sideways is more likely than down. So we're probably not going much above it. This is the end of the fourth hour. Bulls want a bull trend. Bears want two legs up and a trading range day. Always in long, but I think the bulls are going to have a hard time going a lot higher. I doubt we'll do anything like this. They might get to the high of the day, but even if they do, probably sellers around there. Bulls trying to keep the gap open, 36 high, but chances are we'll fall below the 36 high because it's a trading range day. You expect pullbacks below obvious support levels. Bulls want a pullback to the moving average in a bull channel. And they know bears sold the 36 high, and they're trying to get the bears to give up. They're trying to create a bull breakout bar here, reversing 49. I think a trading range day. I think today is mostly a trading range day, and therefore I think limit order bears who sold the 36 high will make money. That will fall at least one tick below the 36 high. Will we find support here, 36 high, or buy climax low, 39 low? We still might get down to the 32 low, although I'm not, I don't know how high the probability is for that. I've been talking about a double bottom higher low, but we reversed up strongly enough to make me think we're probably not going to come all the way down to the 31 low. We may simply stay around the open of the day for the remainder of the day in a fairly tight range. For the bears, they have a bear trend and then a rally, which they think is a bear flag, and they want trend resumption down. I'm going to open my examples folder. File. This is classic trend resumption. Bear trend, trading range, bear trend. Bear trend, trading range, bear trend. Bear trend, trading range, bear trend. But sometimes instead of that, you get bear trend, rally, and then a leg down, which is what we might be getting today. bear trend rally and then trend resumption down after a rally instead of simply going sideways. 7-bar bear microchannel, always in long, probably sellers somewhere above. Odds are we'll get some kind of a lower high here and then a test back down. Well, we might get down here. I think we're probably going to go sideways. Past 10 bars, 1 trend bar, 9 bars with prominent tails. So a lot of tight trading range price action. Three-bar ledge with 2 bars that are almost part of the ledge. Odds are we'll get above 53, 54. I don't know that we'll get much above. We've had about 10 doji bars in the past 11 bars, so we may stay sideways until 11:30 and then decide whether to try to get above the high of the day or go back down to the 31 low. Still always in long, but it still looks like a trading range day, a bull leg and a trading range day. You can see the difference. Yesterday we had a similar thing, breakout, then some dojis going up, breakout dojis going up, bar 46, big tail, bar 47, big tail. Probably a bull leg in a trading range, which today it is. But yesterday, Friday, it led to an extremely strong bear trend. A low probability event usually means that when you win, you can win a lot. So low probability usually is associated with great risk reward. Sometimes, even though low probability means you lose most of the time, sometimes when you win a lot and it offsets all of the losses. So what do you do here? Well, if you buy, I think you can be long, stop below 39. If you get stopped out, you buy more on a reversal up. As far as being short, I think we're always in long, and therefore I do not want to be selling this far down. I want to be selling rallies, not after the market has sold off for 8 bars, 9 bars. When I think the market is probably entering a tight trading range, and I think it's always in long, I usually try to buy, but I buy with a limit order. For example, buying below 50, buying below 52 are good choices. What I did was, when I saw the 52 close with a doji close instead of a bear close, I placed a limit order to buy the close, and I've scalped out. I thought we were going to fall below the 36 high, so I did not want to buy until after we fell below the 36 high. But once it did fall below the 36 high and did not reverse down strongly, I thought we would bounce. The bears would buy back their shorts. You can see the tail. Tells you that a lot of the bulls who bought scalped out, and bears sold around the 49 sell climax high and around the open of the day. Probably more tight trading range. Small ledge, 3 bars. I usually prefer a ledge to have 4 or 5 bars. With 3 bars, usually if you get a ledge top, the market's going to go above it, and then usually it pulls back at least 1 tick below the top, which it did. Home Depot, spike up, and then 3 or 4 pushes up, 1, 2, 3, 4, 5, parabolic wedge. Home builders, I think, are interesting. D.R. Horton, KB Homes, very strong rally with a lot of bear bars in a pretty tight channel, so probably a couple legs sideways to down. Bank of America, really climactic spike in parabolic wedge, 1, 2, 3, 4, 5, probably not much higher. Apple, I don't know if my mic was on, but that's a lot of bars down back into this trading range. So many of the stocks, Boeing, Caterpillar, have been up huge. We just put Boeing. It's not like they invented some, new form of transportation, right? Look how big that is. I don't know what that is, 70% since over here. Huge rally. Caterpillar, same thing. They didn't invent some new special tractor or plow or bulldozer. It's unrealistic to assume that this can continue. It probably has to convert into a trading range. And if the strong stocks, home builders, Caterpillar, Boeing, if everything starts to, and then the parabolic rallies in the financials, the tech stocks, Apple, if everything starts to go sideways, then the E-mini will finally pull back. VXX, I think, is really interesting. This is a 4-hour chart. E-mini is at its high. The VXX basically is an upside down E-mini chart. Not really, but basically that's how it trades. It's a ETF based upon the VIX, the volatility index. And I've mentioned repeatedly that it's starting to work higher, despite being an extreme bear trend. It's starting to work higher, yet the E-mini is right at an all-time high. And the only way that makes sense is if a lot of traders believe that volatility is going to increase. Volatility means instead of going uniformly one way, you start getting more uncertainty, more up and down. And the VIX is telling us that instead of this continuing up without pullbacks, we're going to start getting more volatility that will start to do this probably for at least a couple months. To pick which day is the day that starts the sideways trading is a low probability bet. When you see a chart like this every day, I keep writing every day. I've been doing it for 6 months. the market is overbought, but it should pull back soon. However, picking any one top is low probability. At any one top, the odds are the top will fail and it will go at least a little bit higher. And that's true even today. The odds are, instead of this being the high, the odds are, even if we reverse down, we're going to go a little bit higher. Even though the odds are we're going to get a 5%, 100 plus point pullback soon. VIX, this is the first time when it's gone up for a lot of days like this. We've had 1 or 2 day rallies. This is a 4-hour chart. We've had 1 or 2 day rallies, but not a 3-week rally. And it's happening with the E-mini at an all-time high. So something is telling us that something's wrong with the bull case in the E-mini. And you can dismiss it and say, oh, the VXX, who trades the VXX? Well, a lot of people trade the VXX. Here's the volume of the VXX, 44 million contracts. Right, that's absolutely huge. Right, so a lot of institutions pay a lot of attention to the VXX, and therefore a lot of institutions are telling us that we're getting a sustained increase in volatility, even though it has not shown up in the stock market yet. Bears trying to get a bear breakout below a bull flag and a measure move down to major higher lows, 37 low, 31 low. I am flat right now. Kind of a bad time of the day. Usually the market tries to do something at 11 o'clock. If it fails, it tries again at 11:30, and we're right in between those two times. 11 o'clock, we went up and down. Maybe this is the start of a swing down to these lows. If this accelerates, I'll sell the market, but I don't think it will. Look at the past 30 bars. Okay, when you look at this, you think, oh wow, we're going to get a big trend. Or do you look at this and say, every time we get a big bull bar, it reverses down. Every time we get big bear bars, it reverses up, right? It's a trading range environment. So looking for a trend in this kind of environment is usually not a good thing to do. Already closed the gap. So 57 could not even close below the bottom of the range. Is it a buy signal? A wedge, 43, 53. Well, it is, but it's also a fairly tight channel and a tight trading range, and not really good for stop order buys, like above bars, like above 56. The limit order traders are making money, selling above 54, buying below 53. Very good bar for the bears, but 10 bar tight trading range, almost about 15 bars if you say it began at 43. Also a limit order market. You can certainly sell for a swing down to the 31 low, but more likely we're going to continue sideways more. Testing the 41 buy climax low and double bottom 39 low. This is the buy zone. About a fairly tight bear channel. Limit order bulls buying below bars 57 probably will make money. Stop order bulls with the 4 bear bars, I'm not sure. And for the bears, I would not sell down here. It looks like a bear leg and a trading range day. Consecutive bear bars, probably a little bit lower. I've been talking all day about some kind of a double bottom. And over here, I thought we'd get one with 31. We still might get one. It looks like that's what the market is trying to do, get down to the 31 low. But now we have 5 or 6 bear bars. The first reversal up will have the same problem that this sell-off had. If the sell-off is too strong, the reversal up usually does not lead to a major reversal. much more. And now, for the bulls, a slightly higher low double bottom, but 5 consecutive bear bars, not a very good buy signal bar. Excuse me, not a very good buy setup. Would I sell here? No, because today's a trading range day, and we had 2 lows here. Very often in the market, when it has 2 lows at the bottom of a trading range, it goes below one, not below the other. And even though it's 5 bear bars, it's still a bear leg in a trading range, and it's too far down, I think, to be selling down here. And for the bulls, 5 bear bars, tight channel, it's probably better to wait for at least a micro double bottom. If it's not a good buy, can you sell? Is it far enough up to sell? I would not. To me, it's in the buy zone. We're in the neighborhood of the 31 low. And to buy, I would rather buy with a limit order, or if we get a micro double bottom. What about trend resumption, bear trend, rally, bear trend resumption? This does not look any stronger than the rally here, and therefore, rather than trend resumption, I think a trading range is likely. 31 low is probably around the bottom of the range, so we're probably about as low as we're going to get. We're getting near the final hour. Open of the day will probably be a magnet, and we'll probably close somewhere around the open of the day. So right now we have a doji bar on the daily chart. The bears, a pullback from the breakout below this bull channel, but probably buyers below 64, buyers below 31. Bull scalpers, 64 low, made 1 point. They might hold, thinking that limit order bulls bought the 57 low. We're already above the 57 low. Trading range likely. I've been talking all day how I thought the day would close around the open of the day. I still think that's the case. And since we're running out of time, we're probably not going a lot lower. My one reservation about this is we did not get all the way to the 31 low. And we got to within a tick, which is good. But I would rather have it get to it or even a tick below it and then reverse up. When it reverses up from just above support, there's a higher chance that the reversal will come back down. Would I short down here? No, because I think it's a trading range, and I think we're near the bottom of the range, and I think there's a magnet at the open of the day. Now, can this be like 16, 18 bull, bear, bull, bull, bear, bull? It can be, but even if we do get below 66 and below 31, the odds are there'll be buyers not far below. Remember the 60-minute chart a few hours ago? I said it was a high one bull flag, but it looked like a bad setup, and there would be buyers above the high of that bull bar. And, we went a little bit above, but could not hold above. I also think that we're going to get to the 60-minute moving average. This is the all-time high. Probably tomorrow. And we may get profit taking into the end of the month, which means tomorrow and Wednesday we may get a pullback simply because the month has been so unusually strong. What do you do here? To me, I scalped out. I would do nothing here. Are we still always in long? I think we probably are, as long as we're staying above the 31 low. You can make an argument that we had 3 bear bars, 4 bear bars, maybe we're always in short, but I think the bears had to get out above 63 because of the potential double bottom, higher low, major trend reversal with an okay bull bar. They have to sell again below a decent bear bar if they believe it's always in short and they want to trade always in. But I like the bull case better here, and I still think trading range day is more likely than a resumption of the bear trend. So bear trend pullback, resumption of the bear trend. The bears did an okay job here, but a terrible job here, and we're still at support. What about buying the 66 low? Buying 64 is profitable. I like to buy the first time it goes down, and I usually do not buy the low 2. I like to buy the low 1 if you have a bad low 1 bear flag at the bottom of a trading range. Not a lot of people willing to sell down here, and we're not going up because the bulls are scalping. So they're not willing to hold on to longs. For the bears, you can call it head and shoulders top, bear flag, left shoulder ahead, right shoulder. But I still think trading range day is likely, and I do not want to sell this low down. If it clearly becomes very bearish, then I'll do it. More likely, open of the day will be the magnet at the end of the day, so we'll close around it. Low 2, but big tail below, and support 31 low. I think not a very good stop entry sell. The location is good for the bulls, but I do not want to be selling. I do not want to be buying a low 2 bear flag, even at the bottom of a trading range. So not good enough to sell. We're still at support and a trading range, bottom of the range. But for me, not good enough to buy. If the bulls get a pretty good reversal up, like 23, right, then I would consider buying even below a big bear bar, 28, a low 2 sell, or here, a second entry sell. I would certainly be looking to buy either below bars or above bars on the resumption back up. Bulls trying to prevent the low 2 from triggering. Everyone knows there's a big magnet at the open of the day, and that's where we're probably going. The bears would like to get the breakout below the low 2 and then the move down to the low of the day in the moving average and create a better looking sell signal bar on the daily chart instead of a doji bar. They want the day to close on its low. But enough of a reversal and good enough follow through, more likely the market's telling us that it wants to hang out, finish around the open. Not a good looking buy, so not a lot of bulls buying above 68. 5 consecutive bear bars. We may have to test down here and get a small double bottom in addition to the bigger double bottom before the bulls will be willing to buy it all the way up to the open. For the bears, head and shoulders, top bear flag, left shoulder, head, right shoulder. This is a better setup for the bears. We have a wedge, 3 pushes up, 64, 66, 68. So it's a wedge bear flag, but I still think the odds are that we're going to try to close near the open of the day instead of near the low of the day. So probably not high enough probability for a scalp below 69. One tick bear body, so not a very good sell. Bears do not want to sell, and therefore it doesn't look like it'll trigger. If it does trigger, probably buyers not far below. We still have a lot of time left to get to the open of the day. More likely than getting down to the low of the day. Wedge bear flag. Bears trying to get down to the low of the day. That would turn the day into a bear inside bar, and it would be a better sell signal bar for tomorrow for the parabolic wedge. 1, 2, 3 on the daily chart. I think we're going to get a 5% pullback starting soon, possibly starting on Friday, possibly starting the next week or two, because the buy climaxes on the daily, weekly, and monthly charts are so much more extreme than they have ever been in the 120 years of the Dow and the 95 years of the S&P. The odds are the market will start to do what it's done in the past. But bulls will buy it. When a chart looks like this, even if you get a very dramatic sell-off, the best the bears probably get will be a trading range, so not a lot of downside risk. Stop entry bears below 70 made a scalp, but I think most of them taking that sell are doing it hoping for a swing down to the 60-minute moving average. We've been sideways for 4 hours, betting that it's now going to become a trend is a low probability bet, so it's not a very good swing. And the probability selling below 70, I think not high enough for a scalp. I did not buy, right? The market's deciding it's going to close here or here. And, I bought down here, but not over here. So I'm hoping that the market does something that will allow me to get at least 1 or 2 more scalps in today. Bulls want a triangle. Low, higher, low, and then lower highs. And bears want the breakout below the trading range. And they'd like to get a measure move down and totally reverse all of Friday, but that's not likely. More likely, the trading range will continue, and we'll have a hard time getting down to the low of the day. We might get a little bit below 31, but probably not all the way down here. Bears don't mind 1 or 2 ticks below 31, but they don't want 3 or 4 ticks. If we get 3 or 4 ticks below, then we're probably getting down to the 60-minute moving average and maybe the low of the day. Close anywhere down here would make it always in short, but trading range day, usually by the time it becomes always in long, it's going to reverse soon. And by the time it clearly is always in short, it's going to reverse up. This is enough of a bear breakout to make it unlikely that we'll get back to the open of the day. Let me just check a measure move down from the high to the open. Open's an important price. So, you always got to be thinking about it as being possibly the middle of something. I'm currently flat I did not sell during 71. I was too slow to make up my mind. And trading range day, so I'm very hesitant to sell near the low of the range and right above support. Trading range day, reversals are more common than successful breakouts. Limit order bulls, 63 low, probably will make money, even though 71, 72 is good for the bears. Big enough bear breakout, similar to 14, 15. Most traders are not going to buy above 73, even if it looks like 16. The bears will probably get at least a small second leg down. Important, 63 low, 31 low. Bulls bought the 31 low, they bought the 63 low. Will the market get one tick above those lows? If so, the bulls are making money in a bear breakout, and that reduces the chances of a big bear finish. We had that exceptional bull finish on Friday, and the bears would like to do the exact opposite today, but this was low probability. It's also low probability today as well. Very close to the 60-minute moving average and close to the low of the day. 73 is a pullback from a bear breakout below the trading range low, but not a lot of traders are going to sell with a stop below 73. Final half hour of the day, a lot of the bulls will not buy with a limit order here either, because no room, no time to scale in. So not a good sell, not a good buy. Down at reasonable support, low of the day, 60-minute moving average, but pretty tight sell-off, tight channel. Unless the bulls get a pretty dramatic bull bar of 75, a lot of bulls will not buy, and a lot of bears do not want to be selling at support. So it looks like it's pretty much the opposite of what we had yesterday, where we had a relentless rally at the end. We're trying to get a relentless sell-off. Overall, despite a lower high major trend reversal, it still could be two legs down, one pullback two, so a big high two buy. 5 ticks below 21, so limit order bulls bought the 21 low, they bought 1 point lower, and they've made money. Problem for the bears, right? Is it strong enough to buy? Is it going to be like 21? It might be. For the bulls, it's a big high two buy. You got a bull trend, 2 legs down, ABC pullback. It's about a 50% pullback. Here's the bottom, and there's the top, and we're right around a 50% pullback. And we're at the support of the 21 low, a prior low, and the 60-minute moving average. Always in bears at this late in the day, I would get out above 75 if it has a bull body. If it does not have a bull body, I would get out maybe 4 ticks above 75. When we fell below the 60-minute moving average last week, sometimes it fell 5 points below before we got the reversal, right? And we're around that right here, not quite 5 points, but we're at pretty good support. 60-minute moving average, 50% retracement of Friday's rally. Can you buy for a possible swing up to the top of the most recent sell climax? Boy, it's really tricky this late in the day. Bears would get out above a bull bar, 77. Aggressive bulls might buy, but you always have the problem of probability, risk, and reward. The probability is we're going up high enough for a scalp if it goes above 77. But the risk is about 4 points. Are you trying to make 1 point or 2 points? And that's the problem. I bought 77 as it started to turn up. I just hit buy the market. But I would not buy above things. Buying a sell climax, I'm scalping. So gives me my 1 point, I get out. Now, 15-minute bar might close on its high. This is the day session. Does not look all that bearish. Looks like a bull trend and a 2-legged 50% pullback, and it is. However, the 15-minute traders, everybody is going to run out of time. The day session 15-minute traders, the channel down is so tight that it's really hard to buy with a stop and make the math work out. You're going to risk 4 or 5 points. Maybe taking a chance that we'll get a V bottom, very sharp reversal up to above 74. But it's really a difficult trade. The risk reward probability, you gotta come up with a trade that balances out the 3 of them. And it's hard to do because the risk is so big. Pretty dramatic finish. Let me just check the volume of those 2 bars. 35,000, 87,000. So it's not. It looked like it might have been bigger. There's still pretty good volume. Pretty climactic. Let me look at the tick chart and see what we get. Ticks negative 1,000 again. Let me put up a 1-minute chart. Okay, so here's the low in ticks. Minus 1,000. Probably not going to be the low in price. And a lot of times you'll get a double divergence, a higher low and then a second higher low, and price will be a new low and a new lower low. And if I look at that, I usually buy for a scalp. I bought as this started to reverse up. I did not look at the ticks, but this is a common situation where you get a wedge bottom in a sell climax in price on the 1-minute chart, and you get higher ticks and then higher ticks again. I'm not looking at volume, but a lot of times this will be the big volume, and you get less volume here, and you get a scalp up. Really dramatic. We have a lot of, I think, good things, interesting, entertaining things going on. The weekly chart, monthly chart, daily chart have never been this overbought. The Dow has been around for 120 years. The S&P has been around for 95 years. And none of this has ever happened in the history of those 2 markets. We have not gone anywhere close to this long without a 3% or 5% correction. And the weekly chart has never been this many bars above the 20-bar exponential moving average. It got close in August but did not touch. and the monthly chart has never had this many bars in a row without a pullback. And now we're getting an acceleration up. So we have a buy climax, and now it's becoming even more bullish. That usually means it's a blow off top. That does not mean bear trend. It just means that the buying will probably stop. The bulls will take profits. The bears know the bulls will take profits. The bears will sell, but the bears know the first reversal down will be minor, so the bears will take quick profits after it falls about 5%, like down to the low of the prior month. I do not think February is going to go below the January low, but February might be like a doji bar up here, and then March might go below the February low. This is the monthly chart. Weekly chart, incredible. Very strong breakout, the strongest breakout in 30, 40, 50 bars. Sometimes you get a pullback and then a second buy climax, another big bull bar, but usually you do not get a third. You can get a parabolic wedge, but in this kind of a context, I think it's more likely that you're just going to get consecutive buy climaxes, and then we'll start to go sideways, pull back to the bottom of the first buy climax, this low, maybe, or the most recent buy climax, and maybe to the bottom of the entire buy climax, this low. So really pretty interesting. Daily chart, parabolic wedge. Different computers see it differently. I would call it 1 pullback, 2 sideways pullback, and then 3. We might get 1 more push up. I do not think we'll get 2 more pushes up before we start to pull back. When you get a parabolic wedge top, usually it does not collapse. Usually it starts to go sideways to down for 10 bars or so, a couple of weeks. And then if it continues for 20 bars, traders will start to look for a bear breakout below the bull flag. They'll have about a 40% chance of getting a swing all the way down here after they get the 20 bar pullback. Right? Once it becomes an endless pullback, then 40% chance you get a bear breakout and a big reversal down. 60% chance you do not. So February could be pretty entertaining. 5-minute chart. Huge, incredible buy climax going into Friday's close. 50% chance there would be some follow through buying on the open. We got very little. 75% chance that by the end of the second hour, we'd have at least a couple hours of sideways to down trading. And the entire day was sideways to down, 2 legs down, 1 pullback, 2. On the open, we gapped down pretty far below Friday's high, but it was basically a 50% pullback of that final rally, and the bulls bought it. And then this rally was a 50% sell-off from Friday's high to today's opening low, and they sold it. And then this is a 50% pullback of this entire rally, and they bought it. Or at least it looks like they're buying it. Day trading today, big up Friday, big down today, big confusion, probably early trading range. Also, we know 75% chance we're going to get a trading range that starts by the end of the second hour. For the bulls, always in long on the open, always in long bar 2, always in long bar 3, but disappointment 4, 5, and 6 did not get to that 3 high. So the buy the close bulls who did not get out, they tried to get out on the high of 5, and they could not get out break even, and they gave up on 7. So we have a reversal, big up, big down. And it's a give up bar. The bulls are giving up, might get a swing down, but with Friday as strong as it is, unlikely that today will be a bear trend day. And therefore, whatever sell-off we get will probably be a bear leg in a trading range. And that means it'll lead to a bull leg in a trading range. So we knew right from the open that the sell-off was not going to go all that far or last all that long, maybe 2 or 3 hours. For the bulls, a double bottom with 8 and 1, but big bear bar probably at least a little bit lower. And then they have 2 legs down, 1 and 10, and the second leg is a wedge with 5 and 8. They have a decent bull bar, but they have 7 bars without a bear body, without a bull body. So I think 11, while it could be the low of the day, it's probably a minor reversal. Limit order bulls made money buying below 1 and below 8, but I'm not sure the stop order bulls will make money. We have a gap 5 low and 9 high, so possible small pullback bear trend, but not likely. Anyway, stop order buy above 11, minor reversal, which means scalp only, and not a very good scalp because the channel down is tight and no bull bars for 9 bars. For the bears, a double top bear flag 9 and 13 closing on the low, but probably not going down all that far. Might get down to the 60-minute moving average, but it's probably going to end up as a bear leg in what will become a trading range. 14, surprisingly big bar. Surprise means low probability event. Low probability event, usually you get at least a small second leg down. While it's possible, 16 could be a failed breakout below 10 and that we go up to the 11 high. Most bulls will want a second entry by 21. Once we got 21, a strong bull reversal bar, slightly lower low double bottom. If you want a wedge 1, 15, 21, the odds were we were going to get up to the 11 high, which was a reasonable buy. So scale and bulls will probably avoid a loss. They'll make money on their second entry and get out break even on their first. It's possible this will remain the low of the day. With 23 and then especially 25, I thought 75% chance 21 would remain the low of the day. And it did until the final 6 bars or so. We got an attempt at another double top or a wedge bear flag with 18, 23, 26. But we got a 6-bar bull micro channel and a good buy setup, probably a minor reversal. Whenever you get a reversal up from a very tight channel, even if the reversal is strong, it's still probably minor. And the best the bulls probably will get is a trading range. Once they get the trading range, they'll try to get a major trend reversal. Here they tried to get a higher low major trend reversal, small double bottom, but 3 big bear bars, not enough bars in the pattern, probably minor. They tried again to get a double bottom major trend reversal 63, but way too many bear bars in a tight channel, probably also a minor reversal. The bears got a double top lower high with 58, head and shoulders top, bear flag, and a pretty good breakout, 71, 72. Surprise, so probably going at least a little bit lower. And we ended up getting below the low of the day. I thought there'd be buyers at and below the low of the day and below the 60-minute, at the 60-minute moving average, because it's also a 50% pullback. And the day looks like a trading range day. A lack of consecutive bear bars, we've got some here, lack of consecutive bull bars, the bear bars coming down here, not all that big. Okay here, maybe a couple second leg down, but it does not look like it's going to result in a huge bear trend. We finished the day with a bear bar closing near its low. It's an inside bar in a bull trend. For the bulls, it's a high one buy, just like there was a high one buy here, bear bar, high one buy here, bear bar. However, this is now after a parabolic wedge rally, and the market is so extremely overdone. And now we have those unusually big bars on the weekly chart and monthly chart. So this is probably the end of the rally for at least 10 bars, maybe probably more. This rally on the daily chart looks a lot like this rally on the 5-minute chart. And the market came all the way down below the bottom of the rally and got 2 big legs down. On the daily chart, I don't know if we're going to come all the way down below the bottom of the rally and have 2 legs down, but I think we're going to get at least a 5% correction, and it looks like it might be starting soon, like today, but we'll see. I told you that a lot of important stocks are not doing well. Apple, bottom of the trading range, but the stock market's at all-time high. Apple is the most important stock in the world, and yet that's how it looks. Home builders were one of the strongest markets. And for the past 3 weeks, this is what they're doing. Financials are always very important. and parabolic wedge rally. Energy, XLE, is the ETF. Possibly consecutive buy climaxes and a double top, so that's not good. Crude oil, parabolic wedge rally, a series of buy climaxes. The euro, consecutive tops. The bears tried to get a double top here, 2 legs up, and we got a bull breakout and now a wedge, consecutive tops. So we got a lot of markets that are starting to create credible reversals, and that I think increases the chances that, as strongly bullish as this is, it's too bullish and too many bars up. Stop entries today. You could sell below 4, but it's probably a lower high minor reversal because only 3 bars up and only a gap down. It turned out to be the high of the day. However, the bears got another lower high major trend reversal over here. This was probably going to be a minor reversal, and it was. It was a strong enough minor reversal, bear break below the bull channel, so that traders were looking for a major reversal, which they got. Stop entries below 6, I'm not sure that it's worth it. We're always in long. We have a doji sell signal bar. And then once we got 7, we were probably going down at least a little bit more. However, 8, double bottom, a high 2, not a good buy. Doji bar, sellers above. 9, a pullback from the reversal down at 7, but a doji bar, it does not look good. Below 13, certainly an okay swing. Double top bear flag 9, closing on the low. You can see traders sold it, probably a second leg down, therefore probably not many buyers above 16. 18, 2 legs up, 16, 18, but a bull bar and a second leg down, possibly will start to go sideways. So if you're selling below 18, you might be selling the bottom of a final bear flag. And then 21, probably the best stop entry trade of the day. It led to a rally for a couple of hours. Below 28, you can argue wedge with 18, 23, but very tight bull channel. Probably a minor reversal to a higher low. And then not a good buy above 31, 32. 40, I think you're only buying that if you're putting a stop down here. And then selling below 48 for a big high 2, 2 legs, a big low 2, 2 legs up. 28 and 46. Not a great short, probably a minor reversal. Give up bar 49, surprise bar, so probably at least a couple legs sideways to down. And then selling below 58, a double top, lower high, closing on the low, probably a minor reversal. But the bears got 5 bear bars and then a wedge bear flag here. Not a strong buy here after 5 bear bars. Not a strong sell here after 7 bar bull microchannel yet. We sold off to the end of the day. Low 172, probably buyers not far below. Not a great stop entry buy above 76 or a great stop entry sell 80. Buy the close, sell the close. 7 was a surprise bar, a big reversal. So you could sell the close, but I'm not sure that it's going down all that far. 14, another surprise bar, sell the close. Even 15, sell the close, but because the odds are high, we're going down at least a little bit lower. But if you take that sell, your stop is up here. It's better if you scale in. Buy the close, 23, I thought it looks like we're probably going higher. The tail on the top of 23 and the doji 24 made me think bull leg in a trading range. 27, big outside up. Possible measuring gap, but it closed right away. And terrible follow through 28. I think we're always in long and going higher. Can you put the stop below 27? You can, but if you get stopped out, you buy and the reversal up. This is one of those cases where you have a bull breakout, but it's not at the bottom of the bull trend. So you can either put your stop below 27 or below the low of the bar. I view 31 as a pullback from the 27 breakout. Sometimes you get a pullback below the breakout, and it's still simply a pullback. By the close, 34, 3 bull bars, the body's getting bigger, tail's getting smaller, probably going higher. buy the close 42 as well. Another give up on 49. Sell the close. Gosh, 4 bear bars, 60, 61, 62, but right at support. Not great. Bigger bear bars, 71, 72, probably a little bit lower, but not great. And then a series of bear bars, 74, 75, 76. I'm not going to be selling. We're at a 50% retracement of Friday's rally. We're at the 60-minute moving average. We're at the low of the day, all our support. And even though it's sell the close, 74, 75, 76, I don't sell the close at support. I look to buy a reversal up. Limit orders, well, probably sellers above 1, but not a great sell. And probably buyers below 4 after the 2 bull bars, but not a great buy. We're around a 50% retracement of the opening gap down. 8, probably sellers above despite the double bottom. And 12, probably sellers above as well, but not a great sell. 12, probably buyers below, but we have a lot of room down to support. And the bulls, a lot of the bulls who bought 12 low, I did not, would get out below 13 because of the double top and 13 closing on its low. And others gave up on 14. Here, 16, not a great sell above. 18, probably buyers below and buyers below 15. And then here, buyers below 26. And then I thought it was clearly always in long. Bulls will buy below anything, below 34, below 38. Can the bears sell above 31? I said that I thought we would go sideways and there were sellers above, but I also thought it was always in long, so I'd rather be looking for the buys. Up here, probably sellers above. I sold somewhere up here, maybe the 45 high. I thought minor reversal, but we ended up with a major reversal. And then limit order market here in a very tight range. Buyers below, sellers above. And then surprise breakout, 5 consecutive bear bars. It's possible double bottom 32, 31, but I thought too many bear bars and the channel from 46 too tight, so probably another minor reversal. Probably sellers above, well, buyers below 64, sellers above 65, sellers above 68, 67, and then down here, market order trades on the sell-off and on the rally. I like this kind of trading. Lots and lots of little scalps. Let me take a look at the VIX and see where we are. Really impressive. It's trying to accelerate upward. Next target is up here. That's telling us, it's telling me that the market institutions are expecting volatility. Volatility means the absence of predictability. Okay, this is very predictable. It's going up in a tight channel, right? The VIX is telling us that it's no longer going to continue predictable. It's going to start getting unpredictable. So I'll start doing this. Okay, question at 65, 66. You said you would buy a low 1, but usually not a low 2. Were you referring to placing a limit order to scalp long below the low 1 sell signal bar near the bottom of the range? Yes. Okay. We have a double bottom 31.63. I've said I was concerned that it was one tick above 31, and it made me think we might test back down. But a decent buy signal bar, 2 legs down, 1 pullback 2, 1 pullback 2, a nested high 2, and then a bigger double bottom, which is a big high 2, and a decent bull bar. And then we have a bull body on 64, and we're at support. So I thought there'd be buyers at the 64 low, and I placed a limit order to buy the 64 low for a scalp. I did not want to buy the 67 low because we have a series of bear bars, so you can argue a bear flag. We might even be always in short. And I'll buy a low 1 at support, a low 1 below a bull bar. It's a bad sell signal, so probably buyers below. But in a bear trend, I don't want to be buying the bottom of a low 2 sell signal or the bottom of a wedge, and therefore I would not buy below 67 or below 70. Okay, question. Did you ever trade when your daughters were young? Any tips for trading with in daycare? Yeah, I started trading in '87, right before the stock market crash, and my first daughter was born in 1988, and I was trading, living at home. It was fabulous. It was just really such an amazing experience. And I get emails every now and then from traders who are in a similar stage in life, or they are where I was, 30 years ago. In fact, one of my girls turned 30 yesterday, which is hard to believe. And I always tell everybody, not just traders, everybody, that having kids is the most magical experience that you can ever have in life. And I think they are your absolute priority. Yes, it's fun to trade and it's fun to make money, but your kids are little kids for only a brief period of time, and the best time is probably age 2 to 10, and all the money in the world cannot give you any happiness comparable to that. So so for me, I traded, but my kids always came first. Anytime my kids needed anything, wanted anything, I stopped and I just took care of my kids. So anyway, that's my perspective on that. Question: how do you avoid buying too high on a limit and selling too low on a limit? So let me find an example. Okay, bar 12. Okay, so is this enough of a trading range so that I can buy all the way up at the 12 low, or is buying at the 12 low too high given the strength of the bear trend? You make that decision all the time, and when in doubt, I always assume it's buying too high and I don't buy there. Sometimes I'll place a limit order to buy 1 point below, 2 points below, but if I see a big bear bar like 13, I'll immediately cancel the limit orders. Up here, can I sell the 45 high? Well, at that point we have 4 bars with prominent tails. Can I sell it, or do I sell 1 point higher? A lot of times I don't take the sell. I'll place the order 1 point higher, but a lot of times I don't get filled, and that happens. If, for example, I don't have any example today, but a lot of times if I think there are buyers below or sellers above, let's say buyers below, I don't buy the low of the prior bar. I'll place an order to buy 1 or 2 points below, sometimes even 3 points below. That happens a lot of times on the open. If I think the market is going to rally and get a lower high, but I think there's enough room for it to go up, 3, 4, 5 points, I do not sell the 1 high, but I might sell, 2 or 3 or 4 points higher with a limit order. So, so it's subjective. If you think you're buying too high, it's usually better not to take the buy. If you think you're selling too low, it's usually what you're doing is your radar is telling you that there's something wrong, and the bull trend is too strong for you to be selling too low. So I just rely on it, and a lot of times every day, probably 2 or 3 times a day, I try to do something. I only will buy 1 or 2 points below a bar, or sell 1 or 2 points above the bar, and I do not get filled. And had I sold it exactly at the high of the prior bar, I would have been filled and I would have made money. And that's fine. I never worry about that. I just worry about whether or not what I'm doing is reasonable. Al, can you please talk about when you would look at a 1-minute chart for more information? For years and years and years, I just traded, I don't know about years and years, for a long time I traded the 1-minute chart. And, for example, on this, I could have traded this on the 1-minute chart. I didn't have to. I would say, a few times a day I'll look at the 1-minute chart. You heard me talk about the tick trades, but a lot of times what takes place on the 1-minute chart, you can see it happening on the 5-minute chart. So on the 5-minute chart, you can see, this is the 1-minute chart, you can see the market's rallying strongly and quickly. I could put up a 1-minute chart and buy above the top of the wedge, or I can simply buy at the market on the 5-minute chart as it's forming. I think most traders cannot make decisions fast enough to trade the 1-minute chart. I'm always on the 1-minute chart. I spend a lot of time looking at momentum. Are we getting big bars? Are we getting several consecutive big bars at a turning point, for example? Up here, are we starting to get a lot of bars closing on their lows? That increases the chances we're going down. If the market's selling off, are we starting to get a lot of bars closing on their highs? That increases the chances that we're going to reverse up. Not too much here. You got 1, 2, 3, but then anyway, that increases the chances that we're going at least a little bit higher. There are a whole bunch of tricks. I don't want to talk about all of them, but to answer your question, I think most traders will lose money trading the 1-minute chart. I think it's better to get really good at the 5-minute chart. And if you get to that point where you just see trades all over the place, every bar, then you might start to look at the 1-minute chart. On the open especially, the bars are usually pretty good on the 1-minute chart. And, if you're really fast, you can take, several trades every day in the open. High 1, not good, but high 2, pretty parallel bars, reasonable buy the close, and then 50% pullback, buy that. Series of bear bars, sell the close. Strong bear breakout, probably not going above the top of the breakout without a second leg down. Surprise bar, sell or sell the bear flag. So stuff like that. If you're really quick, you can do it, but most traders cannot do it, and most traders certainly cannot do it day after day, year after year, indefinitely. So there are a ton of trades on the 5-minute chart, and I think it's far better just to get really good at the 5-minute chart, and then if you want to trade the 1-minute chart, you can. You also sometimes hear me talk about if a market is buy the close, sell the close, strong trend on the 5-minute chart. You can look for an early entry. If you're waiting for a pullback on the 5-minute chart and you're not getting it because the market's in a micro channel, like here, you can always put up a 1-minute chart and then look for a pullback in the 1-minute chart. So at the close of 72, you say, gosh, I want to sell, but I don't want to sell at the low. I want to sell with a limit order. Oh, I did not get filled on 73. Maybe I'll put up a 1-minute chart and see what I get. So you can see the low 2 bear flag, a double top bear flag, bear bar closing on its low. First pullback is here, but first pullback probably going to fail. Just like the first pullback after 10 bars down, probably sellers above and it's going to fail. Another thing that I used to do a lot on the 1-minute chart, I sometimes rarely do it. If I look at, let's say a bear trend, and I say, oh, that looks like a good enough bar to make traders buy it, but it's a 15-bar bear micro channel. There are going to be sellers above. I'm going to either sell or I'm going to look for where the bulls will give up, and they usually give up with a low 2. So low 1, low 2, bulls are going to give up. I'm going to sell. Al, will you ever make some videos that talk about 5-minute trading live? Absolutely. That is my goal. It's been my goal for a long, long time. And, that my next major project, that's what it's going to be. I'll start recording trades, live trades, and then either selling them or making them available to people in the room, or some of them available, sell others. I don't know. That's my next big project, to do it both with swing trades. I think I would like to do it mostly with swing trades, but I may do it with scalps as well. On a day like today, I probably took 15 scalps or something, right? And I think traders might be amused by seeing what I do on the scalps. Not that it's a realistic thing for most people to do, but I think you can see what's possible. However, the 5-minute stuff, I am eventually going to get there, but it's hard because I spend so much time scalping, that's my focus, especially on a day like today when there's so many good setups. This was a swing buy, and I ended up not swinging. I ended up scalping, but I scalped many times on the way up. But I will get there. That's one of my. I have several goals in life, and one of them is to do that, to regularly start to video trades, especially swing trades, and another is a very strong buy the closed market or sell the closed market. Just add on, even 7 or 8 or 9 times, which I've never done. But that's another goal that I would like to achieve at some point. And another one is I'd like to go for an entire year without a losing day. And I don't know if I'll ever get there. I might, but there's always something that happens. I got to go to the doctor, or something happens. So I get 2 or 3 trades early. They're losers, and then I never get a chance to get back on the day. So I end up with a losing day. But anyway, back to your question. Yes, I am planning on videoing trades and showing trades in the room. And hopefully not much into the future. All right, so really good bar for the bears on the daily chart, a bear inside bar. It's a sell signal bar. It's a buy signal bar as well, just like this bar on the daily chart and this bar, bear bars with the market went higher. I think we're going to correct. We're at the end of the month, an incredible month. A lot of the bulls will take partial profits. So that increases the chances that we'll try to go down tomorrow and Wednesday into the end of the month. And if we get 3 consecutive bear bars, that increases the chances that we'll get at least a couple legs sideways to down. All right. Hope everybody has a good night.